So today in this video, I want to break down our simple three-step process that gets us in and out of the market with confidence, control, and conviction. I want to talk about how this process keeps us from hesitation. I truly believe 90% of traders fail, not because of their inability to understand a strategy, not because they're stupid or dumb, but because they hesitate. Because they don't have a very clear, simple, defined approach that they can easily implement that actually gets them good results. I truly believe this is why most traders fail. So today in this video, I want to break down the trade we took on November 9th, 2024. We were live on the Discord and we capitalized on a phenomenal trade. And I want to show you the reason why we were able to long into all-time high with confidence. The reason why we didn't short it, right? I want to show you how our process helps us understand who's actually showing dominance in the market and how we're able to use moving averages to stay in our trades and capitalize on phenomenal returns, right? So to be very clear, the reason we were able to capitalize on this move is because of our confidence in the strategy. The reason why me and my team have so much confidence in our strategy is because we do weekly reviews on this strategy. So many traders come to me and they go, Josh, I don't have confidence while trading. I don't have conviction. I hesitate. I overthink it. I get caught in analysis paralysis. I use so many different strategies and I don't have a simple approach. This is my problem, right? And of course it's your problem, guys. And to get past this problem, you need to build confidence. The only way to build confidence is by putting in the reps and logging the data. Right, so these are our weekly reviews that we go through. These are the plot points, and these are things that we notice while doing this, right? Prices above the 1 hour 9, buyers defend the HPT cross. And what this is telling me is I can use information off the 1 hour time frame to enter into the market with confidence. And this is what I want to break down in this video today, right? So, okay, how do we capitalize on the move, right? So, very simple. Every single day, I approach the market. My first step in my systematic process is identify the critical level. What's the critical level? The critical level is the pint number. It's the price point. It's the level with excessive amounts of volume, right? This is the levels we look to trade off of. These levels tell us a story. These levels give us freedom from the ignorance that keeps traders caught in inconsistent returns, right? These levels help guide us. If we can understand who's in control at these levels, we will have way more confidence, way more control, way more conviction, way more rationality, way more logic when we're actually getting in the market. Understanding who's in control will then give you the ability to stomp out of your losing trades if the other side takes over, right? It gives you that knowledge that you need to enter the market with confidence. Okay, number one, critical level. Number two is the HPT cross, right? This is a very simple way to understand who's in control currently of market conditions. This is where our moving averages come in, right? Over here at HPT, we use moving averages very specifically, right? But very effectively, right? Because if we could understand who's in control of price, using the moving average, understanding the trend, understanding which way the trend's headed. Is it a healthy trend? Is it irregular? Is it unhealthy? Is it erratic? Right? Understanding these things will then give you the confidence to enter into the trade and target your upside targets, right? So number one, critical level. Number two, your moving averages. Now number three, I need to understand where my risk is at. I need to understand that the direction, the dominant player I'm trading with, in this case is buyers, I need to understand they're here. And more importantly, I need to understand they're stronger than sellers. How do we do this? With our entry criteria, the RBI, right? So basically, the reason I was able to enter this long, notice here, chart on the left, we have a break above open print, buyers defended end of day right here, right? Then buyers defended open print right here. And now we're coming up to PDH, right? So now I need to understand who's still dominant in the market. And I do this with my red bar gets ignored. Once this red bar right here is developed, the next bar blows out the top of it. At this point, I am in the market long. So once I see this, the HPT cross off the critical level, I see the moving averages. They're healthy. We're not extended, right? We're not more than 50 cents away from the moving average. This is the 9 double exponential moving average. It's very tight, right? I understand that price is healthy, and then I reference the 1 hour time frame. This is key. This is critical. If I go back to my data, you're going to see here, notes, price is above the 1 hour 9 DEMA. Buyers defended the HPT cross, right? Look at notes on the next trade. Price is above the 1 hour 9 DEMA. Buyers defended the HPT cross, right? Another one. Price is above the 1 hour DMA. Buyers defended. See, out of every trade that I took long in the first week of November, this has been a recurring pattern. This is an observation. Basically, what it is trade with the direction of the 1 hour trend. If price is above it, you should be longing it, right? This is what I'm gathering from my data, right? This is what then gives me the confidence. When I see this, I go, okay, price is above the 1 hour trend. I'm getting the HPT cross. Sellers show up. Buyers defile them. I'm in the market long. My stop is below the red bar, and then we capture a glorious move using the EMA cloud to guide us as the trend continues, right? So this is my very simple 3-step approach. Number 1, critical level. Number 2, moving averages. Getting a clear understanding of what a healthy trend looks like, what an unhealthy trend looks like, right? What's an unhealthy trend? It's a trend that is extended, right? When you want to example, let me show you. Right? We do not want extensions. Right here. Notice here. Chart on the right. Right? Let me make it bigger. Prices moving up in a very healthy way. Right? Notice we're not very extended from price. Price is hugging the 9. The 9 is hugging price. Right? There's a lot of love going on between price and the 9. Then look at here when price gets very extended from the moving average, right? We are, I'll tell you right now, we are almost $4 away from the 9 DEMA. That's what I call opportunity. Why? Because 9 times out of 10, price is either going to consolidate and allow the moving average to catch up, or price is going to reverse back into it. Neither of these scenarios do I want to be shorting the market in this scenario. You understand? If price is extended, I do not want to be trading away from the moving average, right? So price rips back, snaps right back up into the 9 DEMA, and then the trend becomes healthy again, right? So this is healthiness, hugging, healthy, hugging right here. We're below the 9 on the candle before it right here. So right here, I'm starting to become a little bearish, but then price comes right back above the 1 hour 9. At this point, I'm confident enough to go, okay, where's my criteria? There it is right here. I'm in the market long, stop below the red bar, capturing a beautiful move to the upside. Right? So just a quick little recap, guys. What's our process? Our process keeps us from hesitation. Our process is what we study. Our process is where our confidence comes from. Hesitation is going to kill you. Execution is going to help you obtain consistent results, going to help you retain them as well, right? And execution is your ability to act on your edge without any hesitation. It doesn't matter how you feel, your emotions aren't involved. It's you making logical, rational decisions as you spot the market information giving you opportunity. What's our process? It's critical level, right? This is off a pit number. What's a pit number? Previous day high, low, open or close, right? Number 2, healthy moving average relationship, right? I want to see price loving the moving average. I want to see the moving average loving price. This means no extensions, no erratic, irrational, no violent price movements away from it, right? I want to see nice, concise trends that are hugging the moving average. And number 3 is your entry criteria. This is your red bar ignored, your green bar ignored, right? This is a phenomenal way to get in and out of the market, right? And if anybody wants a more thorough breakdown of what our edge is, click the link below. I'm going to show you what it's going to bring to. It's going to bring you straight to my website, right? And I created this resource for the whole entire world. You do not need to be a part of the HPT army, right? You can use this, utilize it, and gather more confidence in this strategy. It's a more thorough breakdown of what the strategy is, right? Number 1, critical level. Number 2, the crossover. Number 3, the RBI, GBI. Number 4, follow the cloud, right? And then number 5, collect the data, follow the data. This is a phenomenal resource, and if you want to get involved, all you have to do is put your email in there, and I will send you weekly reports of our data collections, our findings, and everything we look for. All right, and guys, just before we wrap it up here, for anybody that wants to get involved with my team, Trader Boot Camp promo is still present, but is not going to be present much longer. You can get involved with our team, develop the skills, build the right skill set, the right mindset, the right habits, all for $100, and you will have 12 months access to my trader army. I love you guys. I'll see you in the next lesson.